Right now, Advanced Micro Devices is trading at $260.35, which is a staggering $22.83, or 9.61% higher on the day. This isn't a small drift. This is a violent, high-volume repricing, and it's happening for one simple reason. The market is frantically trying to catch up to the reality that AMD presented at its Financial Analyst Day. The expectation for years has been that AMD is the capable, scrappy underdog. The reality, as of today, is that the company has laid out a roadmap not just to compete, but to co-dominate a market that they themselves have just redefined. If you are looking at your portfolio, whether on a Fidelity platform or just checking the Robinhood app, you are seeing the moment that Wall Street's base case scenario for this company was rendered obsolete. The common belief about Advanced Micro Devices stock has always been one of relative positioning. It's the other AI chip stock. It's the successful rival to Intel in CPUs. It's the high beta alternative to the Titan Nvidia stock. Investors, whether they are new to online investing or veterans using complex interactive brokers trading platforms, have historically viewed this as a binary. If Nvidia stock stumbles, AMD benefits. If you wanted stability, maybe you looked at Apple stock. If you wanted vision, you looked at Tesla stock. If you wanted AI, you bought Nvidia. AMD was the value play, the second source supplier, the hedge. That entire narrative, which has governed this stock's behavior for 2 years, is what just shattered. Here is the new reality that is driving today's 9.6% surge. At its Analyst Day, management effectively tore up the consensus. They didn't just nudge their targets, they launched them into a different orbit. The company is now forecasting the total addressable market for data center chips will hit $1 trillion by 2030. That's a T. This figure is so massive, it almost sounds fictitious, but it's the anchor for their entire thesis. Based on that, they are projecting an average annual revenue growth of over 35% for the next 3 to 5 years. More critically, they are targeting a compound annual growth rate in their core data center business of over 60% and an almost unbelievable 80% compound annual growth rate for their AI-specific data center revenue. This is the rocket fuel. And to cap it off, they put out a long-term earnings per share target of over $20. To put that in perspective, the current street consensus for 2025 earnings was hovering around $2.68. This isn't just a beat, it's a different reality. So let's look at the mechanics of today's move. This isn't just retail traders engaging in self-investing and chasing momentum. The volume we are seeing just a couple of hours into the trading session is already approaching the full-day average. This is institutional repricing. Analysts are in a panic, racing to update their models. TD Cowen just reiterated their buy rating with a 290 target. Stifel is at 280. Benchmark is holding a 325 target. Morningstar, often more conservative, just raised its fair value estimate from $210 to $270. This is what it looks like when the fundamental assumptions for an investment are rewritten live. People with Fidelity IRAs are seeing their balances jump, and managers of Fidelity mutual funds are being forced to reevaluate their entire semiconductor weighting. This is an active, aggressive hunt for shares. What has changed to make these numbers even remotely believable? It comes down to proof. For the last year, the expectation has been that Nvidia stock has an unassailable lead because of its CUDA software platform. The reality is that the market is so desperate for a second source to mitigate price and supply risk that they are actively helping AMD build its ecosystem. AMD management confirmed major deployments with giants like OpenAI and Oracle, proving the AMD Instinct MI series accelerators are not just viable, but are being purchased at hyperscale. This isn't a theory anymore, it's happening. Furthermore, AMD announced its next-generation MI400 series chips, part of a Helios rack-scale system, for 2026. This is a direct shot at Nvidia's flagship GB200 NV712 rack system. AMD is no longer just selling components, it's selling the entire solution, just like its rival. And to address the software gap, they just announced the acquisition of a company called MK1, a strategic tuck-in to bolster their ROCm software platform and AI inference capabilities. They are systematically plugging their weaknesses. So what does AMD actually do? For those new to online investment, it's simple to get confused. AMD operates in multiple segments, which is both its strength and its complexity. They design high-performance CPUs, the Ryzen processors for PCs and laptops, which have been brilliantly taking market share from Intel, and the EPYC processors for servers, which are the backbone of many cloud data centers. This is a strong, stable business. Then they have their graphics segment, Radeon GPUs, which are popular in gaming. But the explosive growth, the reason we are seeing this move, is the data center GPU business, the AMD Instinct accelerators, like the MI300X. This is the product that competes directly with Nvidia's H100 and B200 chips for AI workloads. Finally, through their acquisition of Xilinx, they have a massive business in adaptive computing, FPGAs and SoCs, which are specialized chips for network, industrial, and automotive applications. AMD is the only company in the world that can walk into a data center and offer a world-class CPU, a world-class AI GPU, and a world-class adaptive silicon. That integrated portfolio is their ultimate weapon. This is a good moment to pause and ask a question. Comment below with your honest EPS target for AMD in 2027. Do you believe the $20 plus forecast, or is that just Analyst Day hype? Looking forward, the tension between expectation and reality defines the risk. The bull case expectation is that AMD, with this new $1 trillion market forecast, only needs to capture double-digit share to make its $20 EPS target a reality. The market is big enough for two winners, and AMD has proven it is the only viable second choice. The new partnerships with OpenAI and Meta are just the beginning. The bull case is that this stock, even after today's 9.6% jump, is still cheap based on 2027 or 2028 earnings potential. Many investors using Fidelity brokerage accounts or even a SoFi robo-advisor are being told to get exposure to AI, and this is now a primary non-Nvidia way to do it. But the new reality, the bear case, is all about execution. Can they really grow AI revenue at 80% a year? Can they truly fix the software gap with ROCm to make it as easy for developers as CUDA? Is that $1 trillion market forecast real, or just a symptom of AI hype? Any slip-up, any delay in the MI400, any sign that AI spending is slowing, and this stock could suffer immensely. This isn't a set-it-and-forget-it intelligent portfolio holding. It's a high-stakes, high-volatility bet on CEO Lisa Su's ability to execute flawlessly against a competitor that has a decade-long head start in software. People using fractional shares on Robinhood investments to buy this stock must understand the volatility that comes with this kind of valuation. This is not a place for timid capital. It's a battleground. This is why having a diversified individual brokerage account or using investing sites that provide good research is so important. The story of AMD today, captured in this 9.6% surge, is one of a fundamental shift. The market's expectation was that AMD was a strong number two. The reality presented by the company is that they are aiming for a co-equal number one position in a market that is an order of magnitude larger than anyone was modeling. Today's price action is the sound of thousands of analysts and portfolio managers, from Fidelity Wealth Management to SoFi Invest users, realizing their assumptions were too small. The old narrative is dead. The new narrative is one of execution. AMD has laid its cards on the table, and they are aiming for the entire pot. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.